Atul Suri of Marathon Trends, who is extremely bullish on the Indian markets for the next 2 to 3 years. Yashopadhyay had a chance to speak to him at the CMT conference and began by asking him about the outlook on the Indian markets. Listen in to that conversation.
Indian markets also hostage to a similar situation. Bad macro numbers, corporate numbers, distress. So the headlines are all bad.
Right.
But the market's pushing. The Sensex is at lifetime, made a lifetime high, and the Nifty is kind of one good day from there. So the thing is that in all this gloom and doom, the markets are doing something very different. And at the end of the day, I personally think that going ahead, I think for the next few months, we may have a market that seems to be a little sideways for the month and a half, but I think that'll be a great time to invest, because the big trigger, the next big trigger for Indian markets, I think, is going to be the budget, because the government definitely is in an activity mode, and we've seen that with some major tax cuts. I do feel that the budget could be an interesting space, and the market, based on what's likely to come out of the budget, will not probably wait for the budget. So I think that we will have a very exciting Jan. November and December may be sideways. You may have a little bit of churn. And what you're really seeing right now is an oversold rally. Stocks that were beaten down, or sectors that were beaten down, seem to be having the highest moves. Like you see pharma do well, or you see some distress NBFCs do well. They're doing very, very well. Some media companies doing very well. So what you are really seeing is an oversold bounce, and I think that will happen. The frontliners, the leaders, are resting or slightly correcting. But I really think that the trend has not changed. I still remain very bullish in India. If we get our act together in this budget, we do the things which investors would like or perceive to like, I feel that the market can actually break out and make a much, much higher, backed on global market strength. So to put it in short, I think the markets would be sideways to slightly choppy in the short run, a month and a half. But I think January onwards, which could be very interesting. And the decision point or the turning point could be the budget. So fingers crossed. And we are, as I said earlier, we're in a global environment which is extremely bullish.
One of the most important things to note over here, especially when we talk about the benchmark indices, is the market cap polarization. While we are looking at record highs for both the Nifty as well as Sensex, a large chunk of those returns have been on account of the moves that we've seen for a handful of stocks, be it your HDFC twins or the Bajaj twins and Reliance as well. Going forward, if you are this bullish on the Indian markets, do you expect the market width to broaden, or will this rally be as narrow as the one that we've just seen?
So you're already seeing that the market breadth is improving, and that's very, very important, because to have a sustainable bull market, you need market breadth. 50 stocks alone cannot drive the market. So the broadening of breadth actually creates a bit of a floor. And as I said, the next 1.5 months, we will see this broadening of breadth. But that does not mean that if the breadth broadens, these 50 stocks are not going to do well. They've run very hard for 2 years. They've held the market on. So they may rest for a month and a half. But I personally think that this is where the earnings will continue to come, because as such, we are still not seeing a broad economic revival. Until that doesn't come, a lot of these stocks may have a short covering rally, but for them to go ahead and make new trends, make new highs, you will have to see actual numbers flowing through. And as far as these 50 stocks go, the numbers are there. Yes, you may view them as expensive, but at the end of the day, markets are going to reward numbers and rewards growth. And I feel that post this rest period, these stocks or this set of stocks will break into new highs.
Right. Financials, I want to touch base once again, because that's a huge sector. It has your private banks, your PSU banks, the AMC space that is doing extremely very well. The insurance stocks, they are also doing very well. Within the financial basket, which are the pockets that you see the maximum amount of value emerging?
So again, the question is about where the maximum value is. I don't know where the maximum value is, because value is relative. I look at growth and I look at prices. I think that there are two interesting sectors. Again, they have run up, etc. People have counter arguments. But if you look at the financial services and two spaces in that, whether it's insurance and AMCs, the market is telling you that. I feel that they can be very, very interesting sectors going out. Again, I'm not recommending you go out and buy. Please do your own research. But what I feel is that they have the triggers, or they have the recipe for being very long-term trends. And obviously, that gets me interested.
The government has clearly shown a lot of intent in terms of coming out with reforms, and you also mentioned that this is the key budget next year. The markets seem to be factoring it already. In that case, what is your long-term target for the Nifty and the Sensex for the next year?
I personally think that this breakout post 12,000, which I think we'll see, gives me a kind of a first stopping point around 13,500, which would be a 12 to 16 months target. So I'm very, very bullish in the market for the next 2 years. I think that we've had a phase of underperformance, and when I do cycle studies of markets, I see that Indian markets tend to be corrective or resting for a 2-year cycle, and that becomes the genesis of the basis. So I'm extremely bullish for the market on the next 2 to 3 years.